Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, with daily insight on the Nasdaq-100 Index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large-cap growth and also one of the best-performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Thursday afternoon, we have Joyce, Managing Director on Nasdaq's Market Intelligence Desk, with a review on the Nasdaq-100 levels, as it's been underperforming so far this month, but that may not necessarily be a bad thing. Brian, it's great to have you back with us. And you're right, a couple days into the month, but underperforming by just a bit.
Yeah, we're down a little bit versus the peers this month. We were down a little bit as well as last month. I think it's just a reflection of the rotation that's going on underneath the surface, where growth names are now, the funds are flowing from growth into value. Underperforming sectors like financials, utilities, materials, they're starting to rebound now. Energy's rebounding as well. And so, that's a good hallmark of a bull market. When you have that rotation from one sector into the other, large cap back down into small cap right now, particularly in the last week, we've seen small caps bounce back up about 10% over the last 5 or 6 sessions. So that's a good thing. It's a good signal that this bull market is not just a relief rally where few groups in the new economy are doing well, such as tech. We're now seeing other asset groups like energy and industrials doing well, which should bode well for the economy, or maybe a signal that the stock market thinks the economic outlook is looking better down the road.
All right, let's pull up our first chart here of the Nasdaq-100, take a brief look at levels that we're watching, because it looks like we've almost really were last Thursday when we spoke last.
Yeah, so this is the futures for the Nasdaq-100, and as you can see, right now we're right back to the levels we were last Thursday, and this top around the 11,534 level, 11,570 range, has been a significant resistance level going back since September 7th, so for 4 weeks now. And that's important because, not because I say it so, but because the market is telling us. We have 1, 2, 3, 4, 5, almost 6 different trading sessions where there's a clearly defined resistance here. So if we can get through that, that would be a very good signal that, the upside momentum may really begin to kick in.
Not because you say so?
Not because I say so, the market is telling us so.
All right, let's take a look at the 10-year. I've been hearing about that a lot since the beginning of October as well.
Yeah, so this is interesting because, we are seeing a rotation within the market, and I think the 10-year yield may have something to do with it. Let's see, on Monday of this week, the 10-year yield right here had previously been in a trading range for the last 2 months, about 7 weeks. And on Monday of this week, we broke above that 73 basis points level. We did have one day back in late August where we got it back, we broke out through it, but we pulled right back. It didn't last for more than one session. And so this time we broke out. We're holding those gains. We're consolidating sideways since Monday. And if we can resume this uptrend here, I think that'll continue to bode well for what's recently been performing, which is value, energy, financials. If we look at the yield curve, the spread between the 3-month and the 10-year yield, we can see that's been spiking higher on this move higher on the long end. The previous move higher back in June, that was when financials had really taken off. They did really well in the second half of May into early June. And that was partly due because of this move higher in the yield curve. So we're seeing that again. And as a result, we're seeing financials do well again. And one index that captures a lot of those cyclical sectors is the value index. And I think this is setting up pretty interesting as well, whereas growth kind of looks a lot like very similar to the NDX. A lot of those tech names, consumer discretionary names, the value sector here has been in a sideways range since June 8th. And so if we can get a continued move higher in the interest rates on the long end, I wonder if this index can now break out of this 3+ month range, the sideways consolidation that it's been in.
All right, Brian, thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.